Good afternoon, everybody. This is Patrick Montesdeoca with the Equity Management Academy Live Trading Room. I am doing a special report today, Sunday, November 24th, in preparation for the Sunday afternoon session in the gold market as we open at 3 p.m. Pacific Standard Time. What I want to do is take a look at the chart that we're looking at for the price of gold in the futures contract here. This is the the daily continuation chart. And one of the things that the VC PMI, basically artificial intelligence, is able to do for me as a self-directed trader is to prepare myself for the next trading session by providing me with prospective information that I can use to trade the extreme levels of supply and demand. It is basically a momentum-driven indicator, and it identifies for me as a self-directed trader the highest probability trades that I can identify for day trading sessions, weekly, or for long-term positioning. We're taking a look at the market for the daily data for day traders, and what we have been able to identify here is that the average price is at 1473 as we come into the next trading session that opens up at 3 o'clock in the afternoon. So the market closing below that average price is coming in with a little bit of a bearish indication. The buy one level at the extreme below the mean is at 1466. The buy two level is at 1461. This is for the daily numbers. And the market closed roughly around 1461.50. We're looking basically at the daily continuation chart. Now, what I want to point out to you, which is really one of the interesting relationships that I find in the application of the variable changing price momentum indicator, is the harmonic relationship that occurs between the daily, the weekly, and the monthly data. And so in this case, on the left chart, you see the daily levels of supply, of demand, I would say. The buy one level is at 1466, and that is a 90% probability based on the algorithm identifying that if the market does activate a buy trigger point from this level, that it would basically activate the mean above of 1473 as the target. As you can see, the market is pretty close to the buy two level on the daily chart of 1461. What really is interesting here is that the 1461 matches the weekly buy one level at 1461. So this is what I call a perfect harmonic alignment, where you have the daily signal at 1461 activating a potential buy trigger and the weekly signal at 1461. So I have the setup in place, I have the structure in place, and all I need to do is to allow for the market to validate it or to negate this trigger point. The signal is, if you are day trading this system, use the 15-minute bar. A close above 1461 on the 15-minute bar would activate a buy trigger. I do not suggest that you go short at these levels, because the probabilities of you going short are from the daily buy one level is about a 10% probability of success. From the B2, it's about 5% probability of success going short down here. The weekly is telling you you only got about a 10% probability of success if you sell short here. So what we're looking for is for the market to confirm the reversion back to the mean upon triggering a close above 1461. This is Patrick Montesdeoca. I will be doing more frequent reports like this for self-directed traders that are serious about using the VC PMI or the variable changing price momentum indicator to transform your trading. We'll talk to you soon.
Are you looking for an automated artificial intelligence trading system? Do you want to analyze commodities and financial markets to determine when to buy and sell? Looking for an indicator to predict future trends in the commodities and financial markets? Welcome to EMA2 Trade Live Signals. Our Variable Changing Price Momentum Indicator, VC PMI, is an automated AI trading system developed and tested over a decade. The VC PMI algorithm is based on age-old vortex mathematics combined with Fibonacci wave theory, trend analysis, pivot points, and several other widely accepted financial analytical methods. The VC PMI can help you take emotions out of your trading and rely on simple mathematics to predict future trends in financial markets. This approach will make your trading more effective, consistent, and profitable. VC PMI algorithm. The VC PMI code points and levels are support and resistance levels and behave exactly like any historical supply and demand level. Therefore, the VC PMI code levels are useful as an index tool for both day trading and for selecting and exercising entries and exits for longer-term traders. Why VC PMI? The VC PMI relies on artificial intelligence to analyze markets and predicts future movements, which seek to determine what a security or commodity is worth at a given point in time. The VC PMI uses technical analysis in the form of mean reversion trading, which seeks to capitalize on extreme changes in the pricing of a particular market based on the assumption that it will revert to its previous state. The VC PMI can be applied to both buying and selling, as it allows a trader to profit on unexpected upswings and save when security or commodity is trading at an abnormal level. Visit EMA2trade.com for more details.